What we're going to be doing tonight is we're going to be talking about, first of all, just a real brief introduction as to what DragonCharts is, and then we're going to dive into the fun stuff, which is actually looking at the software and showing you how the screener works to find the best stocks in the various Asian markets. For those of you who don't know me, my name is Darren Wagner. I'm the founder and CEO of DragonCharts, which I started about 1 year ago. And I'm actually also the founder of a company in the US called Morpheus Trading Group, which has been, for about 10 years, been teaching people how to trade the US markets through a proven strategy that we use of relative strength and trend trading and technical analysis. I've written some books on the topic, which are best-selling books in the US. And we also run a hedge fund. So we not only talk about the concepts that we teach, we also trade with real money. And the reason I started DragonCharts was about a year ago was because I saw the opportunity in Asia, long-term growth. I saw much more opportunity than in the US. And so far that's proven to be correct, with the US having all of its debt problems and the Asian markets have less debt. And I think the longer-term growth potential is greater in Asia. And I've been living in Asia now about 8 years. So I wanted to create DragonCharts as a way to share the knowledge and the education that I've been teaching people for many years in the US. I wanted to bring that to Asia and share that here as well. The very first thing I discovered upon doing so, though, is that there was actually not very easy access to good technology. Whereas in the US, there's many software platforms for screening the stock market. What I found is that in most markets in Asia, the technology just isn't there. In terms of being able to easily screen stocks for different technical patterns. And if the technology is there, it's typically very expensive or limited to professional traders such as banks and mutual funds and hedge funds. So we started DragonCharts as a way to level the playing field for the average individual. So let's go ahead and dive in. Let's just talk a little about what DragonCharts is for those of you who are new to DragonCharts. First of all, we provide you with access to the Asian markets. As Brian was actually just asking us about right before we started, one thing we do is we actually help our clients get set up with brokerage firms that enable you to trade directly in the Asian markets. So it doesn't matter what country you live in, whether you live in the US or Malaysia or Singapore or Hong Kong or India, we have partnerships with brokerage firms in the area that can help you trade not only the market of the country that you live in, but other markets throughout Southeast Asia as well. And we can actually help you get set up with those. So it's obviously the first step before you can profit in the market is you have to have a brokerage account, and we provide you with the access to help you get set up. We also provide you with tools. With the DragonScan stock screener, we provide you with the unfair advantage that professionals don't want you to have. The reason we say that is because professional traders can make more money when the individual traders are kind of kept in the dark with regard to technology and what's happening. They have a bigger advantage and can make more money. But now with the introduction of the DragonScan stock screener, you'll be able to find very quickly and easily the best stocks that the professionals, normally it was limited to only this type of technology for professionals. So this is the second thing you need once you have access to the markets, is you need the tools. And that's where our software comes in handy. And we'll be spending most of tonight's session talking about the actual tools. And then finally, the knowledge. Our stock trading success video course, both Narissa and Brian have taken it, and both of them have just emailed me last week and said that it was really good material and they enjoyed it, and it was very informative and comprehensive. This is a big part of our success. Is we not only provide tools, we don't just give you the software and say good luck. We actually teach you an actual strategy for using the software, so that the entire software that we have is designed completely around our actual trading strategy. So the two go hand in hand. When you take the course and then you look at the software, the same types of trades we make that we teach in our course are what the software is designed to show you. And we also give you daily stock pick videos. If you've already had a free trial, you've probably been receiving these every day, these daily stock pick videos where we actually we use the DragonScan stock screener to analyze a couple stocks we like for potential buy entry. And then we send out a worksheet that shows you the exact price of where we would buy it, where we would sell it, and in other words, our stop price. And then we keep track of those, the performance of those trades. So whether you're a beginning trader and you need the video course to get you started with our strategy, or if you're an advanced trader and you just want some trade ideas with the stock pick videos, Either way, the combination of the three things, access, tools, and knowledge, will get you on your way. So let's dive into the fun part now, which is the tools. Let's talk about the DragonScan stock screener, which is the reason that you're here. This is what you're looking at right here is what we call the trade tracker sheet. And what we do is every day when we send out our stock pick videos, we also send this sheet that you see right here, where it talks about which stocks that we're in, open positions, and then our watch list. Now, over the past 2 weeks, we've entered 4 stocks. This is for the Indian share markets, but we also do one for Hong Kong, and we're adding new markets as well that we cover. But for India, for example, we've entered 4 new positions over the past 2 weeks, and one of them was actually just entered today. And of these 4 positions, you can see here, this is the date we entered it in this column right here. This is the price we entered the stock at, and this is our stop price. This is, in other words, where we would sell the stock if it moves back down. And based on today's closing prices, we're proud to report that 3 of the 4 stocks that we've entered are showing a gain of more than 5% based on today's close from our entry price. So if you factor out this one trade that's showing a loss, we're up a net gain of about 10% on these 4 trades that we've entered only over about the past week. Now, what I'm about to show you is how we actually found those trades using the DragonScan stock screener. What's really amazing is, if you think about it, the Indian markets and most of the Asian markets are near their recent lows. They're near their 52-week lows right now, following on the weakness of the US markets. But even though these markets are weak, we were able to use DragonScan to find the strongest stocks in the market. So as soon as the Indian market bounced, these stocks rallied to new highs. In fact, 2 of the stocks you see on this list that we're in right now are actually at fresh 52-week highs. And that's why there's no overhead resistance. So this is what, just to show you the trade tracker sheet that we send out to all of our subscribers, this is what it looks like, what you see right here. So we not only give you access to the software and give you stock pick videos, but then we also send this sheet which accompanies the explanation on the video. And then down here is our watch list for stocks that we're monitoring for potential buy entry if they hit our trigger prices. First thing you need to do to launch DragonScan is you need to have an account with us. If you're not already a member, then you can sign up for a free trial. So you click this button for the free trial, and then you would log in with the username and password you select. So here's my username and password. I hit login, and once I've logged in, it takes me to the software page, and I just click on Launch Now. Now, the beauty of this software is that there's nothing to download. It's all completely web-based, so you never have to worry about downloading anything. And did you see how quickly it loaded? As soon as I clicked on Launch Now, the software loaded in about 2 seconds. So it's very light, and all you need is just a web browser and basically any computer. So the system requirements are very minimal. So what I'm going to do here is walk you through basically, first of all, how the actual screener works. And then we're going to talk, and then we'll look at some specific types of scans you can do to find actual stocks in the market. And this stock screener is an end-of-day stock screener, which means it doesn't show intraday real-time prices. It's designed to go with our strategy, which is swing trading. In other words, we actually hold stocks for a period of several days to several weeks, sometimes longer. So we're not day traders, in other words, although we could always add that feature down the road. But this is designed for swing traders like ourselves. And there's 2 tabs on here. Once you've logged in, you'll see Dragon Scans, and then you'll see Self-Serve. Okay, and the difference between the 2 is Self-Serve is for people that want more customization of the types of screens they want to do. And I'll show you the different things you can do with this in a minute. But this is more customizable, basically. You can find different types of plays. DragonScans, on the other hand, is great because what we've done is we've already taken the formula that we've been using for many years, a proven formula of making money, and what we've done is we've actually taken those formulas and put them into a one-click scan where you just hit the button and then it returns all the stocks that meet that criteria. Now, remember I said earlier that our software is designed to go hand in hand with our actual video course, the Stock Trading Success course. And in our Stock Trading Success course, one of the video modules talks about buying stocks. What types of stocks do we buy? And we say there's 3 types of trades we do. One is relative strength breakouts, one is pullbacks, and one is trend reversals. So that's exactly what we've programmed in here is what we teach in our courses. Relative strength breakout will show you all the stocks in the market that are showing relative strength and forming a base of consolidation and are about to break out or have just broken out above that consolidation. And a pullback scan will show you stocks that are trending higher in a steadily uptrending market, and then they pulled back to, let's say, a 2 to 7 day pullback off their highs, and they pulled back to support of their 20-day moving averages or their uptrend line. And then we've got a trend reversal scan. This is only to be used after the stock market's been in a downtrend for at least about 9 months. This is designed to help you find the first stocks that show signs of leadership by reversing their downtrends and forming higher lows and higher highs. And it's to help you find early leadership. But right now, we don't really use the trend reversal scan very much. What we're using right now primarily is the relative strength breakout scan, because there's a very basic concept that we teach in our course and we've been living by for 10 years, and that is that if a stock is so strong that it doesn't go down, even as the market's going down, what do you think happens to that stock as soon as the stock market indexes bounce? Obviously, that's going to be the first stock to rally higher. If it's so strong that nobody's selling it, even as let's say the Hang Seng or the Sensex or the Nifty is going down, if that stock's not going down, then it's going to be the first one to rally to a new high. And this relative strength breakout shows us stocks that even as the markets are near their lows right now, okay, these are stocks that are breaking out and moving higher, and many of these are at fresh 52-week highs. Now, first thing we do to use the Dragon scans, we'll do a couple sample scans here on Dragon scans, and then we'll look at the self-serve after that. First thing we do is select country. Notice we have China, which includes Hong Kong, we have India, Indonesia, and Singapore. Now, somebody asked me earlier, what about Malaysia? At the present moment, we do not have Malaysia, but the nice thing about this software, because it's web-based, we're continually updating it and improving it and adding the features and functionality to it. And we actually are planning on adding Australia and the US exchanges within the next week or so. And we'll probably be adding other emerging markets in Asia, such as Malaysia as well. So it's very easy for us to add other exchanges, but this is what we have right now. Let's just use India, for example, since that's the worksheet that I showed you earlier, the trades that we're in for India. Then it asks you what exchange do you want to screen. If you leave it on all, it'll look in both exchanges, or you can narrow it down to just the National Stock Exchange, for example, or the Bombay Stock Exchange. And then you would select, if you want to make sure your scan results are within a particular index, let's say within the Nifty, you could select index, but I like to leave it on all so you get more results. Now what we have here is a price and volume filter. Price range will let us set the minimum price that the stock must be. So if you don't want to trade penny stocks, for example, you can set a minimum price. Now because it's the Indian market, this is in rupees. So we could set a minimum of, let's say, 100 rupees and no maximum. It's very easy. We just drag the scale. Everything about our software is designed to be extremely user-friendly and simple. Average daily volume. I like to make sure we trade stocks that have a minimum average daily volume of at least 100,000 shares, just to make sure that we're not trading something that's illiquid. And then we simply hit the Scan Now button. And in a matter of, what was that, about a second, the software returned all of these stocks that meet the criteria that are trading at least 100 rupees, have an average daily volume of 100,000 shares, and also are in the National Stock Exchange. Shows you here the number of results. There's 10 results found. And if you want to download these results into a spreadsheet, you just click on this button here and it'll export them. And then you can import those stocks into a watch list on your trading software with your brokerage firm, for example. Now you can sort these stocks by any of the different columns that you wish. Sort by name, for example, or you can sort by ticker. Just click on the column. You can sort by closing price. What I like to sort by is relative strength. That's this last column. Relative strength, this is not to be confused with RSI. It's not the RSI indicator, for those of you familiar with that. Instead, relative strength shows you how strong that stock is relative to every other stock in that exchange. So it's comparing that stock to all of its peers, in other words. So a stock that has a 95% or above is going to be the top 5 strongest stocks in the market. Now this goes back for like, the calculation takes about a year So what we're finding here is not the strongest stocks today or 3 days ago. This is like over the past year, steadily trending strong stocks. That's what we're looking for the relative strength breakout. And sometimes if the stock is an IPO, for example, it's only been trading a few months, it might accidentally pop up on the relative strength scan, but it doesn't have enough price history to be accurate. Now you notice that of these 10 stocks that popped up on here, one of them was actually Gujarat Mineral Development, and one of them was Gujarat Fluorochemicals. If you recall from this sheet that I showed you earlier right here, there's the two of the stocks that we're in right now. We bought Gujarat Mineral Development on August 30th, and Gujarat Fluorochemicals today hit our entry price, and both of them are up 5 or 6% since our entry price. Well, guess what? The way I found these stocks, the way we found these stocks before we bought them, was by doing, you guessed it, a relative strength breakout scan. So these stocks have been on our breakout scan for a while now, and every day we just simply scan through and look at the chart patterns of all the stocks that are on the relative strength breakout, and then we look for the actual patterns that meet our buy criteria for a potential trade setup. Out of every 10 stocks, maybe only one or so, about 1 out of 10 is only going to be something that's going to be viable based on our strict rules and criteria. We don't guess or go on a feeling. We have very strictly defined rules that help us know when it's time to buy a stock and when it's not time to buy a stock. And this narrows it down for us. And if you didn't have the ability to do this, we found the 10 strongest stocks in the National Stock Exchange in a second. I mean, looking through thousands of charts manually would take you like a whole day. What we've done in a few seconds here. Now we can click on any of the stocks to see a chart. As you can see, our chart is going to pop up. On the left side is all the stocks that are in our results for the scan. Okay, and what we've got here is just a basic candlestick chart. You can change the time frame. The default is 9 months, but you can select 6 months or you can select 1 year. Okay, and if we look at the 6-month time frame, those of you who actually are trading in Indian markets, you probably, if you're on a free trial, you would have received our Indian stock pick video this morning, and in that video we did this. We said this stock is on our watch list for a potential breakout above this horizontal base of consolidation. It meets our criteria, in other words, for a breakout entry because it's been holding support of the 20-day exponential moving average right here and consolidating in a tight base. And guess what? Today it broke out and triggered our buy entry. The stock rallied about 7% today, and it's up about 5% since our entry, which was right at this horizontal line. Just to check here to be sure, 507.60 was our entry price that we had listed before the market opened today. So we're in from 507.60 and it closed around 535. Notice the volume also picked up. The volume was about double the previous day's volume. That's a good sign. We get price confirmation that the institutions are backing the price of the stock. But what's really nice about this is if you look at the 1-year chart, this stock is at a 52-week high. If we look at a 3-year chart, it's at a 3-year high. In fact, if we look at our maximum data, it's going back to 2008 that the stock was only trading higher like 4 years ago, which isn't really that relevant. But the key thing is at a 52-week high. And this is stock. If the stock is so strong that it's already at a 52-week high, even with the Indian market near its lows, if the Indian market does start to rally, this stock is going to power higher. It should be one of the first ones to zoom higher, and we're already in it thanks to the DragonScan stock screener. Now we can, if we want to very quickly and easily look through all these stocks, you can just click on any of them in the box here that are in your filter, or there's another way you can do it. You can just hit, if this button is checked, enable space through, you can just check the space bar, hit the space bar on your keyboard, and you don't even have to use your mouse. You can just quickly look through and say, okay, this one meets my criteria, this one doesn't meet my criteria, etc. Now, if you change any settings on the chart, like you click here, or you draw a trend line, or anything like that, then you won't be able to space through because these charts are designed by Flash. So you just hit this button right here, and then you can space through again. Now, these charts are, they're basic charts. They're not designed to be, this is not a technical analysis platform. This is a screening platform. So the idea is for you to find the setups using these charts and then use your brokerage platform, such as Interactive Brokers, for all the detailed technical analysis and charting. But like I said, we're constantly improving. In fact, we're actually designing HTML5 charts instead of Flash charts, which will be much nicer and more customizable. So I showed you earlier, looking at this sheet here, Gujarat Fluorochemicals. We just looked at that one. The other stock that we've been in since August 30th is Gujarat Mineral Development. And you can see that one right here. We actually bought this stock. Let me go back to, let me look at the 6-month chart here. You can see a little better. We actually bought this stock on, I forget the date exactly, August 30th. Okay, and the reason we bought the stock is it had just broken out of a base of consolidation that you see right here. On this day right here, this big candle up, and notice the big volume. Okay, so that was on August 23rd. The stock broke out above a base. Now that caught our attention. When we saw that base, then we waited for the stock price to consolidate, and it actually formed what's called a bull flag pattern, which we talked about in our daily stock pick videos. So we tell you all these things we're looking at, just like a live webinar here. We do this in our videos every day that you receive when you're a member. So you're learning as you not only get stock pick ideas, but you learn our strategy as well. So we bought this stock on August 30th, right after it moved above the high of this bull flag pattern that you see right here. Okay, that's the bull flag. And right after we got in, it moved higher. It rallied in today's session and yesterday. So it's just like the other stock we just looked at. This is also at a 52-week high. In fact, the stock just has broken out, looks like, to an all-time high. If we look at all the price data, yeah, it's at an all-time high now, which is exciting because there's no overhead resistance. Big volume today. Look how large the volume was, so it's supporting the stock. So these are two stocks that we're in that are looking great, and our entry price was precise, right on the breakout. And notice that we've got, again, a 6% gain in this one since we entered it, so just in a couple days. Now the stop prices, that's also taught in our course when we raise our stop prices, but basically when both of these stocks move a little higher into the money to show us a little larger gain, about 7 or 8%, then we'll raise our stop prices to break even. And then as the stock moves up to about 20%, then we'll look to take some profits. We typically look with our swing trades for about a 20% gain is our goal on a stock trade, and then we look to get out and wait for it to pull back and for the trade to set up again. So if we can get about 20% gain, we're happy. And with 3 of these stocks so far, we're already on our way. Again, found them very quickly with the relative strength breakout. Closing that up. Now, sometimes what's going to happen is you'll do a scan. Let's say you want to do a pullback scan, and you hit the Scan Now button, and you'll get this message. It says, this scan is correct, but no results have been found due to current market conditions. Please change your scan criteria. That's telling you that our software is working fine, but there's no stocks that meet the criteria for the pullback scan. Now that is very important because what that's telling you is it's indicative of market conditions. If there's nothing that meets our criteria for pullback, that means that we're not in a strong market where stocks are steadily trending higher for long enough of a period to be a pullback play. So on the other hand, if you're in a really strong bull market and you do this scan, you're going to get a lot of results. So the number of results you get if you do these scans every day, I mean, we do this every day. This is how we find our stock picks every day. Every night after the market closes, we spend 30 minutes or so and just look through. If the list starts to grow, then you know the market conditions are improving. For example, we had 10 on this list. If suddenly it becomes 20, then you know that the list is, the market conditions are improving. Trend reversal. We got 3 stocks that actually meet the criteria for a trend reversal. Let's just take a look at how that's different than a relative strength breakout, the trend reversal scan. And now notice if it's a trend reversal scan, the stock's not going to be at its 52-week high because it means it's reversing off its lows. But notice what happens here is this stock's been trending lower now for about a year. And if we draw the trend line, we can see that the stock is about to break out above, or it's about to test anyway, resistance of this 1-year downtrend line. Now the reason it popped up as a trend reversal play is right here. What you're looking at right here is the higher low that formed. A higher low from this low and then a higher high. So that higher low tells us that the trend may be reversing. Notice the stock has moved above its 20, 50, and 200-day moving averages. The green line, the pink line, and the blue line. So that's a good sign. So this is a stock for those of you who like to get in early trends. By the way, you can disable any of these moving averages. Click on the button up here to turn off the moving average, for example. If we want to turn off all 3 of them, we can. You can see how that works. And these are the three types of moving average time periods that we use for short, intermediate term, and long-term trend. Now let's take a look at the self-serve scan. By the way, for those of you that are joining us late, welcome. We will actually, we've been recording the whole session, so we can email you a copy of it so you can see what you missed. Don't worry. Okay, let's look at the self-serve scan. Now the self-serve scan, as I mentioned, is also designed to work with what we teach in our stock trading success course, but it's more customizable. That's the difference. And we can look here, for example, let's do Hong Kong this time, because we just did India. We can select China and then Hong Kong Stock Exchange or Shanghai, and there again we can select an index or leave it blank. And let's look at each of the different criteria that's on here. First of all, we have moving average scans. And you can use all three of these if you like, or you can do none of them, or you can do one of them, whatever you like. But what this slider says is that if we want to make sure the stock is trading above its 20-day moving average, this is where we select the parameter. We would say 20-day, and then over here, SMA is simple moving average, EMA is exponential moving average. So what we do is we use our 20-day exponential moving average. So let's say we want to make sure the current price of the stock is at or above its 20-day exponential moving average. Then what we would do is keep this slider where it is, equals to 90% above. So that's going to tell us everything that's at or up to 90% above its 20-day moving average. So anything that's in a short-term uptrend is going to be above its 20-day moving average. And if we hit scan now using only that criteria, okay, we get 183 results. You can see that, 183 results. So there's 183 stocks trading above their 20-day exponential moving average in the Hong Kong exchange. Now we can add a second moving average filter. Let's say we want the stock to be not only above its 20-day exponential moving average, but we'd like it to be above its 50-day, because the 50-day is an indicator of intermediate term trends. Okay, so we want to make sure the intermediate term trend is up as well. Now we leave both of these on, we hit scan now, we'll get less results. Now we drop down to 99 results found. And then if we want to make sure it's above its long-term uptrend, then we would select, let's make sure the stock is also at or above its 200-day moving average. And this is the three criteria that we typically use: a 20-day exponential moving average, 50-day simple moving average, and 200-day simple moving average. So this will return to us only stocks that are trading above short-term support, intermediate-term support, and long-term support. So these should be some of the stronger stocks in the market that get returned now. We had 99 results, now it drops to 58. So there's 58 stocks exactly in the Hong Kong exchange trading above all three of those moving averages. So this is, again, a good starting point if you wanted to know, okay, how do I begin even finding the strongest stocks? Well, it's a good starting point, finding the stocks that are in an uptrend. Now we could even add, just like I showed you earlier, we have the average daily volume and the price filter. Notice that the prices are different now because now we're looking at the Hong Kong exchange, which is traded in Hong Kong dollars. Before it was Indian, so it was rupees. So that automatically changes based on what exchange you select, which market you select. So we can put a minimum price in, let's say 1 Hong Kong dollar. And let's say the stock needs to trade at least 1 million shares a day, average daily volume. Now we hit scan now. And it goes from 58 results down to 22 results. So some of those stocks that were returned before were either trading at a price below $1 or they were not very liquid. So now we've got 22 quality stocks that are above their 20, 50, and 200-day moving averages. And you can look through these just like I showed you before. You can sort by relative strength. Okay, and the other thing we can do is, instead of moving average scans, we can also do relative strength scans. This is a little shortcut here for finding the absolute strongest stocks in the market in the quickest possible fashion. You can do a relative strength scan, and you can say, just show me all stocks that have a relative strength ranking of 90 to 100. And that's going to show us, again, all the stocks that are in the top 10% of the strongest stocks in the market based on our formula. We'll hit scan now. There's 53 results found. And all 53 of these stocks, if we look at this relative strength column, they're going to be 90 or above. And all these that are 99% are going to be the strongest stocks in the market right now. If you looked at them, you'd see that they're trading near their highs, or they've been trending higher for a long period of time. Now, because if you want to narrow it down even further, you could say, show me everything 95 to 100. Okay, now you're only going to get 34 results found. And if you want to make sure that the stock is also above its moving averages, you can throw that in as well. Now you go from 34 down to 3, okay? So even though there was 34 stocks with a relative strength rating of 95 to 100, only 3 of those are above all 3 of their moving averages. See, a stock can have a 99% relative strength rating and be at its 52-week low if every other stock in the market is as well. So remember, it's a comparison of how strong the stock is relative to all the other stocks. It's not relative to the broad market. It's relative to other stocks in the market. So you can see you can do a mixture of any type of scan you like here. And we also have one other criterion here, close versus 52-week high. As I showed you earlier, those 2 Indian stocks that we're in which we're up about 5 or 6% in each one since we bought them, both of those, did you notice the similarity that they're both trading at 52-week highs? Because stocks at 52-week highs have no overhead resistance or supply to deal with, so they're the stocks that generally continue higher very quickly. So we could say, show me only stocks that are no more than minus 10% to 0% below their 52-week highs. So for example, this is going to be all stocks that are not more than 10% below their 52-week high. There's 14 of them. And then you could say, okay, show me every stock that's within 5% of its 52-week high. 2 results. And these are going to be the only 2 stocks that are, within 5% below its 52-week high, because the Hong Kong market's pretty weak, but we still were able to find the strongest stocks in the market right now. In fact, Guangdong Investments 270 is one of the stocks on our watch list. If you've been on a free trial receiving our daily stock pick videos, you may recall seeing this stock on our watch list for potential buy entry. It's got a 91 relative strength rating. It's trading above its 20, its 50, and its 200-day moving average, and it just broke out. It's at a 52-week high. So we're looking for a pullback entry in this stock, for the stock to pull back to near its breakout level, which usually happens in a weak market. So once again, taking hours of labor and narrowing it down to just a few seconds to automatically find the strongest stocks. Now, somebody, I believe it was Perry, asked me earlier, can you use the software to find weak stocks? Absolutely, yes you can. There's several ways you could do that. One way is simply by saying, okay, well show me everything that has a relative strength rating of below 30. Okay, this is going to be in the bottom 30% of the weakest stocks in the market. There's 130 results found that have a relative strength rating below 30. We're trend traders. That means that when we buy stocks that are moving up and we sell short stocks that are moving down, we don't try to be a hero and guess where stocks are going to form a top or where they're going to form a bottom. We simply follow the trend. We trade on both sides of the market, actually. In our hedge fund, as Ed mentioned earlier, we made about 2% gain last Friday when the U.S. market went down. We made about 2% because we were short. You can buy puts as well. If you don't sell short, buying puts is an option. You can find here the weakest stock by relative strength rating, or you could do the opposite with the moving average scans. You could say, okay, show me all stocks that are below their 20-day exponential moving averages, below their 50-day moving averages, okay, and then below the 200. And this will show you stocks that are trending steadily lower, that are in a short-term, near-term, and intermediate-term, and a long-term downtrend. We hit scan now. And there's going to be more of these, 225 results. There's more of those than there was stocks above their 20, 50, and 200. This is also a good indicator of market conditions. You remember before when we said, show me all stocks above their 20, 50, and 200-day moving averages, there was about 30 stocks. But if we say below those levels, there's 200. Well, that tells you there's a lot more stocks trending lower than there are trending higher right now. But we can use our software to do one of 2 things. Either find the weak stocks to sell short on a bounce, or we can look to buy the strongest stocks that are holding up while the market's going lower, and then those will be the first stocks to rally higher when the stock market finds support and forms a bottom. Or you can combine any combination, throw in the relative strength as well. Now you got stocks below all 3 moving averages and with a weak relative strength. These are going to be some of the weakest stocks in the market right now. You can just click on them, you'll see. They'll be trending lower and below all 3 moving averages. You can see how weak that is. Now sometimes a stock is weak and you want to sell it short. For those of you who don't know what selling short means, that's when you make money on a stock when the price actually goes down. It's something that we teach you, but it works just like buying a stock, except it's done in reverse. And if you want to sell short or buy a put option for a stock, you may want a weak stock, but you don't want something that's been down like 10 days in a row, because the risk reward is not very positive or very favorable. You'd rather be in a stock that's bouncing into resistance. So in that case, you could say, okay, I want weak stocks that have a low relative strength rating, but I actually want the stock to be below its 200-day and below its 50-day moving average. But I want it to be above its 20-day moving average. Okay, I want the price to be at or up to, let's say, at or up to 10% above the 20-day exponential moving average. We hit scan now, we get 10 results. Now, if we look at any of these charts, what you're going to see is a weak stock that's trending lower. It's below resistance of its 50-day moving average, intermediate term, below resistance of its 200-day moving average, but it's going to be above resistance of its short-term 20-day moving average. So let's take a look here and I'll show you. Here you go. It's a good example. If you zoom in, we can see better. The stock is below its 200-day, the blue line, below the 50-day, the green line, but above the 20-day moving average. You could also do something that, let's say you want to make sure, like here you go. This is a good example. The stock's been trending lower since, well, it's an IPO, but it's been in a steady downtrend the whole time. And it just moved above its 20-day MA, but it's still below its 50. And that gives you a much better risk reward to sell short the stock up here than when the stock is way down here at its lows. Or you could even say, show me anything that's above its 20-day moving average, and I want it to be within 5% below or up to 5% above the 50-day moving average. So in other words, you want stocks that are bouncing into near resistance of their 50-day moving averages. So you could actually just do a scan like that, 5% below to 5% above. That's going to show you anything that's near its 50-day moving average. There's 5 stocks. So it's very customizable. Now, for those of you who've been trading for a while, if you're an experienced trader, you may be thinking, well, is there any other technical criteria on here? Can I do RSI? Can I do Bollinger Bands? Can I do MACD? Can I do price divergence? Can I do volume weighted moving average? Well, the truth and the reality is that there's hundreds of technical indicators out there, and they all work to a certain degree. But the beauty of our strategy is that we keep it simple. We buy stocks that are showing relative strength, trending higher, and we sell short stocks that are showing relative weakness, trending lower. And we do that through using moving averages and trend lines, and volume, and looking at bases of consolidation. Our strategy is very simple, but it's proven to be profitable. We've been doing it now for 10 years. And on my other company's website, MorpheusTrading.com, we have the performance results of every trade we've done over the past 10 years in our newsletter. And you can see that we've beaten the market, the U.S. stock market, by several hundred% or more over a cumulative time period. And we're doing the exact same strategy with the Asian markets with our daily stock pick videos and with the sheets we show you. Like, for example, right now, 3 of the 4 stocks in the Indian market we got in are up more than 5%. One of them is down 6%. So net profitable there, about 11% since our entry. Of course, we haven't closed the trades yet. We're still in them, but they're looking good so far. And so it's important that we do track our results, so we don't only promote stocks that do well. We're going to tell you if a stock doesn't do well also. But the strategy is very easy to follow, and the software is designed again to go hand in hand with our strategy. So it's a holistic approach here. DragonCharts is not only software, and it's not only a trading course, and it's not only stock pick videos. It's all 3 of those things put together to teach you a strategy, and then the software to give you the tools to help you master that strategy as well. So that's the concept there behind what we do. Now, if you're a new trader, a lot of what I talked about tonight might be confusing to you or might not make sense, and that's okay, because in our course, we teach everything from the very beginning. And we have, as I mentioned, Brian and Narissa that are in the webinar right now. They both are Diamond members, and they've taken our course, so they can attest to the fact that it starts with the very beginning basics, of how to get started, all the way up through more advanced topics like the money management, the psychology of trading, and when to get in, when to get out, and everything else. Now, basically, if you want to use DragonScan, you want to get our stock pick videos, you want to get our list of trades every day, you have to do one of two things. You either have to be a paid member or you have to be on a free trial. Now, we do provide a free 2-week trial to everybody.
To get started with your free trial, you go to DragonCharts.com, which is our website, and click on the button that says Free Trial. And you'll be provided with a little pop-up box. You first enter your information, okay, and choose your country, fill out your email address, and then hit the Submit button. Now you get a little message here that says, please wait, you're almost done. In order to complete your registration, please select your free trial service package on the following page. And on this page, it'll say select your free 2-week trial membership below, and you'll be presented with several options. We have our gold membership, we have platinum membership, and we have diamond membership. The gold membership is just basic monthly access. It gives you access to the stock screener, along with our daily stock pick videos where we pick the hottest stocks with chart patterns. And we also include, every day you get the spreadsheet that says exactly where we're going to buy and where we're going to sell each stock, so you can actually follow right along in the strategy. You can come to the website and have a closer look, but this starts at just $79 US a month after your free trial. So it's a free 2-week trial period, and then you can cancel your trial at any time during the 2 weeks, and we do not charge your card. But if you do not cancel your trial, the trial, then it just becomes a subscription at $79 a month. We can accept we accept any of the credit cards or PayPal. And then we have a platinum, which is quarterly access, gives you a discount, 20% discount on the monthly access. But what most of our members do is actually the diamond membership, because this is the best deal. This gives you lifetime access, not 1 year, but lifetime access to the screener, to the daily stock pick videos, and it includes our stock trading success video course, which is $395 value if you purchased it separately. That's included for free. It's an 8-part video course that teaches you the entire DragonCharts trading strategy. And for a special limited time bonus, you also can receive an autographed copy of my book, Trading ETFs, Gaining an Edge with Technical Analysis. That's just a one-time fee of US $895, and really, if you think about it, that's once you've subscribed to the screener for less than a year, you've already paid for lifetime access. Not to mention, if you throw in the video course, which is almost a 400-hour value, that's basically half of the cost right there. So you can see why most of our members choose the diamond membership. But in any case, you can get your free 2-week trial to any of these packages. Just click on which option you'd like. You'll receive a 2-week trial, and then you have the option to cancel within your trial, and if not, then it'll become a regular subscription based on the service package that you choose. If you've already had a free trial, we do limit the free trials to only 1 free trial per household, but you can still follow the same procedure. Click on the free trial button up here, and then you can still register, and you just won't get the second free 2-week trial, and you'll have to choose a new username and password if you already had a trial membership before.
That concludes our webinar for today, so I do have time for questions and answers. If anybody has any questions at all, you can type your question right in the chat box, and I will be happy to answer your question for you. Ed is actually, like I said, one of the traders and one of our mentors here at DragonCharts. He runs a lot of the webinars, so let me go ahead and turn on Ed's mic so he can introduce himself.
Yeah, one thing I wanted to, add, I typed it in there a moment ago in the instant message, but that a really important aspect of trading that you get when you subscribe to our service is knowing when to be in the market and when not to be in the market, because there are times where it just doesn't make any sense to be either long or short the market, that you need to just be on the sidelines. And so much of being a good trader is understanding what the trend is and when there's the potential for a trend reversal coming. There's certain proprietary things, trading signals that we use that tell us when it's important to either stay out of the market or like in the conditions we're in right now in the markets, and it makes sense to be short the market. So that's a big aspect. We teach more. There's a lot more value added than just getting a piece of software where you can scan stocks. You also get access to a lot of knowledge. And that's all I got to say right now, Darren. I just wanted to say hi to everybody. And
okay, I'm just looking here to see if there's any other questions that we've got. Rohit, hi, welcome. No, we don't do options trading. Options is a whole nother ball game by itself. We know how to trade options and we do it once in a while, but we focus primarily on the stock market. Now, I will say that we have a lot of our members, what they do is they take our stock pick ideas and trades. Let's say we're looking at buying a stock that's breaking out above resistance. They will actually enter the stock in the same time that we enter it, but instead of buying the stock, they would just buy a call at the same time, or they could sell short a put or whatever strategy they use. So a lot of people use our stock pick ideas and our videos for options trading, even though we're actually trading the individual stock. But to answer your question, no, we don't focus specifically on options trading. Yes, Umesh, because what we teach in our video course is we teach a methodology that can be used in trading not only stocks, options, and futures, and commodities, but can be used for trading any market in the world. See, what you have to realize is that stock markets are the same all around the world. It doesn't matter whether you're in the US or India or Hong Kong. All the chart patterns work the same way, and the indicators work the same way, and the trends work the same way. And the reason for that is because markets are driven by human emotion. And we talk about this in our course. The human emotions of fear, greed, hope, and regret are what drive markets. And because humans are basically the same all around the world, we see the same types of patterns happening in every type of market. So what we teach in our course, you can use in trading any market in the world. The patterns are going to work the same, but more importantly, you can also use it for trading any type of instrument, not only stocks. You can use it for trading futures. You can use it for trading, commodity contracts, whatever the case may be. And even in our daily stock pick videos, we also talk about the broad market indexes like the Nifty or the Sensex, for example, and we give our view. In fact, those of you who are already on a free trial and those of you who are Diamond members for the Indian market, check out tomorrow our video. We're going to take a look at the updated view of the Nifty index. So, for those of you that trade the futures, you can use these kind of like I talked about with the options. You can use our prices to know when to trade based on what the stock price is doing. Greg, welcome. I mentioned a little earlier, maybe you joined us late, that we actually are adding the U.S. markets as we speak. Adding one exchange takes about 2 weeks because there's a massive amount of data that has to be crunched and imported into our servers. We started the import last week, actually, so it shouldn't be more than about 1 to 2 weeks until we actually have data for the U.S. markets, and that's already being done. It's already underway, and at that time you'll be able to use this platform for the U.S. markets just the same as all the other markets. The same scans will work, so that's coming very soon. What I would recommend if you're interested in the U.S. markets is if you haven't had a free trial, sign up for the free trial and get familiar with the software while the U.S. markets are being added. And then once the U.S. markets are online, you'll already be familiar with the software. Rather than waiting till the U.S. markets are available, you could just go ahead and check it out now. If you already had your free trial, you can just choose your membership. Yes, absolutely, Umesh. You can use any technical analysis software. The course that we teach, the Stock Trading Success course, if you scroll up here, you can use any technical analysis platform at all for the concepts we teach. The DragonScan software that we use, the screener, is just a bonus. It's designed to work hand in hand with our course, which is why a lot of people like it. But the techniques we teach you, absolutely, you can use with any platform, any brokerage firm, any technical analysis platform. you know, if there's something you like better than ours for the actual technical analysis, that's fine. Like I said earlier, our platform is not really designed to be a technical analysis platform. There's already companies that do that. What our software is designed to be is a screener, a very powerful screener, which is not easy to find in Asia. So a lot of people use it as a screener and then export the stocks and then import them into their actual technical analysis platform so they can do further studies and technical indicators. So the answer to your question, Umesh, is yes, you can definitely use any technical analysis software after the course, and it'll work just the same for you. Any other questions? Well, if you do think of any questions later on, you're more than welcome to email me. You can personally email me at this email address right here that I typed in the chat box, Darren@DragonCharts.com. Be happy to answer any questions that you have. The next live webinar will be next week. And in the meantime, as long as you're a diamond member or a gold member, or you're on our free trial, enjoy our stock pick videos and enjoy using the screener. Have a good night, everybody.